everyone, and welcome to this panel as part of the American Geographical Society's Geography 2050 Towards a More Equitable Future. This panel in particular is really intended to provide a conceptual cornerstone for economic geography. I'll stress the word economic for the conference. I hope everyone's enjoying the proceedings, and we hope that the three world-renowned experts that we have for this panel will inform your learnings and deliberations in the overall conference. I will briefly introduce each of our panelists, and then we'll just open the conversation. I guess I'll go in alphabetical order by last name. Jana Reins. Jana is an economist and partner at the McKinsey Global Institute, McKinsey & Company's business and economics research arm. She's based in the San Francisco office. And since 2003, Jana has led MGI's research on productivity, on competitiveness, on growth, as well as a lot of issues on health and urban economics. Jana, welcome. Thanks for joining us.
Thank you. Look forward to the conversation.
Michael Storper. Michael, and I should say we've got the Globalization and Geography in Action. Jana is joining us right now from the San Francisco area. Michael is in London, and Stephanie is in Washington, D.C. So I'll go next to Michael Storper. Michael is an economic geographer who currently holds faculty positions at UCLA, at the London School of Economics, and formerly at Sciences Po in Paris. And his fields of research are regional economic development, urbanization, and the link between innovation and geographic change and globalization. He's the author of over 100 peer-reviewed articles, has participated and solo authored 10 books. And Michael, thank you for joining us.
Thank you for having me.
And Stephanie von Friedberg. Stephanie serves as the first senior vice president of operations at the IFC within the World Bank Group. Stephanie currently leads all IFC investment operations and advisory services, all of which aim to address key development challenges and help create jobs and opportunities in some of the world's most poorest and fragile countries. In addition to overseeing new businesses, Stephanie manages IFC's $60 billion debt and equity portfolio in more than 100 countries. Stephanie, thank you for joining us.
It's great to be with you, Matthew.
Great. Well, with that, we've got these three renowned experts, and let's just jump into the conversation. Jana, maybe I'll put this to you. I'm wondering, as you look at the future of where the world is today here in late 2021, we know that there have been economic forces generating where and how economic activity happens within and across countries. But as you look ahead, if you look in the next 3 months or 3 years or 30 years, you can take your pick, what forces do you think are going to be really shaping economic geography that all of us should be thinking about?
Thank you, Matt. Great question, and love for you giving me a choice on the time frame. As a wife of historian, let me take the longer point of view, which is sometimes something that we economists get blamed for not doing. And when we look at kind of the next few decades, clearly the big trends that we see that are going to shift economic geography is demographics, aging, and instead of seeing that as a problem, it really is the time when the largest cohorts of educated, high-income folks will have time when they are still in great shape to really add to the debate. So I'm actually somewhat optimistic on how the baby boomers will change many things on how we do when they have the time and the money to do so. The other big shift is urbanization. Most of that debate has been about the power of increasing urbanization, adding to economic growth. Well, in most regions, we are kind of running out of steam on that front. Most people already live in cities, and the big change will come from how people and economic power is shifting between different economic regions. And this is one when, frankly, the last, let's say 3 years, perhaps not, but more than 3 months will make a difference, given that we have really changed how many people work and work from home. So I expect to see some real shifts there on the urban side. A third factor that will, go ahead.
No, go ahead.
The third one is technology, relentless continuation. And I'm hoping that that will be something that it will not only lead into some of the challenges that we have seen, particularly rising divisiveness. I hope we're going to find ways to actually use technology to bring us closer together, just like we do in this panel. So I think those are some of the three big things that I'll be looking for.
Yeah, wow, I love that kickoff. Thank you. Demographics, urbanization, technology, especially over many decades. And I heard a note of optimism there, that I hear you saying that some of the challenges that we have faced even before the pandemic, you think are going to be addressed in the way that builds more economic hope and opportunity across geographies. So that's great. I appreciate that. Stephanie, maybe I'll come to you. How would you think about next 3 months, 3 years, 30 years, and some of these deep forces of economic geography?
So I'll take a long view too, and I agree with everything that Jana said, although I would flip the demographics on its head and say the thing that we think the most about are where the youngest populations are and where we're going to see the most growth. So if you think about Africa as an example, has the youngest population of any continent on the planet, and it's growing really rapidly. So how do we actually create the economic conditions to ensure that they can have private sector-led growth and create the critical jobs that are going to exist? That's one. Two, on technology, I think for me, it's not just technology as an overlay in relation to creating digital economies. And what does that mean for the human capital and the skills that we need to build? And then finally, the one thing that Jana didn't mention, which is something I spend a great deal of my time thinking about, is climate change. And I think that's going to affect both of the developed world and the developing world in really different ways. But climate change is something that collectively we're going to have to figure out how we tackle.
Stephanie, thank you. And Jana, I see you've got a raised hand.
Absolutely. And by the way, just to pile on the climate change, I didn't ignore it because I don't think it's important. I just think it is important because I'm hoping it will lead into a real technology boost. Sometimes challenges are a real push for technological innovation, productivity gains, etc. Something that we certainly could use.
Yeah, great. I like the optimism again, but boy, we got to get from here to there. So Michael, tell us, as you survey where the world might be going in the coming months or years or decades, how do you think about what forces we should keep an eye on?
I think in addition to those that have been mentioned by the others, I would stress ongoing technological change and its geographical effects. And the reason that I raise this is that the last several decades, we've seen a big source of geographical. On the one hand, we've had in the world a spread of technology, meaning that more parts of the world are participating in both the absorption of technology and the creation of it. And you might call that also, the spread of global capitalism in some way. But at the same time, within that, what we see is that there's been a great deal of geographical divergence, the kind of creation of what you might call global spread with local hotspots. And those hotspots are, of course, another terminology you could use is the superstar cities and metropolitan areas that have been kind of sucking in the talent and becoming sort of great centers of prosperity, great centers of technological innovation, and yet at the same time, of course, they're tending to create this opposite set of regions, or to have a mirror image relationship to a bunch of what sometimes we call now left behind regions. And so I think that's really, I believe that is likely to continue, and it's likely to be one of the great problems that we need to struggle with.
Michael, thank you. I'm going to add to that by asking, or just reminding most of us, as I'm sure most know who are joining us for this conversation, in the past kind of 30 to 40 years within the United States, within many European nations for which we have data, unlike much of the early part of the 20th century, economic activity across space became less equal rather than more equally distributed. As Michael said, the rise of these superstar regions and cities. And Jana and colleagues at the McKinsey Global Institute have done some path-breaking work on this. So maybe a question I'll put to all of you. I appreciate these broad forces you articulated, but when you look at the coming, again, months or years or decades, do you see that the world on balance is going to become more unequal in terms of the distribution of economic activity across space? Or do you think it's going to become more equal, more like it was in the earlier part of the 20th century? Anyone want to hazard a crystal ball forecast on that? We'll start with Michael and bring it to Jana and Stephanie.
Well, so actually, I've been digging into the U.S. case, and some of the things that my team that we've been discovering are that, when I went into looking at it, I thought that the American, basically the American territory, that we'd been diverging generally, meaning that you sort of had a process where counties or metro areas were pulling apart from each other. And actually what we've discovered is that there is a set of American regions that are moving upward toward the mean, meaning you've got basically catch-up regions mostly in the South. You've got and you've got some rapidly kind of developing sort of, you might call them very successful regions that are moving up the ladder. You got a bunch of older regions that are sort of, you might call them downward converging, so old industrial areas and a lot of parts of the interior. And then you've got the superstars who were on top in 1940 and are still on top, which I didn't know until I studied it. So what you've got is kind of a mixed story in America, which is this class of superstar regions, which in my estimations is something like 22 to 25% of the American population lives in them, and they have about 40% of American output. And the rest of the country, say, 60 to 70% of the regions with about 60, with maybe 60% of the output, and they're kind of going in different directions.
Okay. So the salience of your research is hugely important because we know for electoral politics within and across nations, the issues of where economic activity happens is massively important.
Yep.
So Jana, maybe if I go to you and then we'll go to Stephanie after you. Again, you and colleagues at MGI have done some path-breaking work on superstar cities and the co-location oftentimes of superstar companies. So I'm wondering, based on your recent and ongoing work on that, how you see this question of divergence versus convergence across space of economic activity.
So I see that in kind of two different time frames. In the very near term, COVID has been a big shock for that, mostly because of the fact that particularly those people who can work far away have chosen to do so. And many of them have taken advantage of actually changing the way they live, expanding space at home, and potentially moving into further away locations. So in the near term, it's very clear that the superstar cities of New York and San Francisco were hardest hit. And it will take a while for them to get back because of the fact that a lot of that change is sticky. It's sticky because of the fact that we learn to communicate over Zoom and at the distance. And it's sticky, especially because the skilled workers liked the lack of commute, the longer sleep, the fact that they have more time for other things as well. So I think in the near term, there is clear slowing of some of that widening gap between the superstar cities and others. It's less about people moving to the countryside. It's not about that. It's more about if you want, the fringe regions, the suburbanization, which frankly has been the trend for a long time. But when we look at 30 years down the line, I think we actually have a choice. It is a choice for individuals, how and where they really choose to live. And I think that's something to see, where the balance of being close to the hub of action versus having more time, quality time in nature and access to outdoors, etc. What companies do, where the kind of current pull between companies keen of getting their employers back versus a lot of workers being resistant. And I think we estimate that it's going to be roughly a 20% increase in working from home, 20% decline in business travel. So real shift substantially. And of course, in the real long term, as Michael well knows, government policy will matter. How do we regulate zoning, etc., is going to influence on how many people can find affordable housing in the superstar cities versus some other regions. So I think that will be, and those are all in a way choices. And I think it will be interesting to watch some of the counteracting factors will play out.
Jana, thanks, because this work you guys are doing is so important and ongoing, like the scholarly work that Michael's doing. Stephanie, how do you guys see this at the IFC, especially given so many sort of fragile nations and cities that you engage with?
Yeah, Matthew, I actually want to take the long view because I'm super optimistic when it comes to this. But if we can just touch first on the fragility and conflict, some of the stuff that Michael was touching on, we're actually seeing in our countries of operation. So if you don't have to look much further than Africa today to know, there was a coup in Sudan, there's a war in Ethiopia, the surrounding countries in the Sahel are all struggling. And I think we are going to see more fragility and conflict in the short term as the conflict between globalization and nationalization kind of rubs into each other. But on the longer term, we're anticipating that the global economy doubles by 2050. Okay, the lion's share of that growth is going to come from emerging markets. 2/3 of the world's population will live in urban areas by 2050. And the 10 largest cities in the world are going to be in emerging markets. We know that when people move to cities, their incomes typically grow and you see economic prosperity. So for me, I think you see more equalization, not less equalization across the globe. Now, that may differ at the national level because I think in countries like the United States, we have some pretty serious problems that we need to address. But I think as the global economy grows and as the bulk of that growth comes from the private sector and is being led by emerging markets, we're going to see more inclusion and more equity across the globe.
I love that optimism. I'm a tinker by disposition, if you recall the Winnie the Pooh stories. So I want to build on that, if I may, stick with you, Stephanie, on this, and then go back to Jana and Michael. Are there examples from the work you do at IFC of cities that are really succeeding in this, identifying inclusive growth as populations grow, managing to address the perennial issues that come with that, of pressures on housing and transportation? What are some examples of that we could all look to and maybe draw some lessons for cities that are doing this well?
Great question, Matthew. And, we've had an urbanization and cities practice for a long time, but right now it sits at a very important precipice because it's time for these cities to actually plan and plan the right way. So they're thinking about green buildings, proper transport that is clean and green, better housing, better flow of their people. So we actually spend a lot of time with cities doing several things. First, working on their sustainable infrastructure. Second, working on their buildings and green buildings to try to make them greener. And third, to make them financially self-sustaining. So the best example that I can give you, and we've been in a partnership with the city of Izmir in Turkey for over a decade, where we actually started on the transport side, but have slowly worked through water issues with them. We've worked through hospital issues with them and have also helped them become a self-sustaining city, so they can actually issue bonds and fund what needs funding for their own citizens. Doing a very similar thing in Bogota now in Colombia. So we're seeing many of the middle-income cities emerging and being able to sustain themselves. And now the question we're asking ourselves is, can we create the right kind of tools and incentives to bring some of those larger growing cities, Nairobi, for example, or, some cities in Nigeria, can we find ways to actually help them plan better and move forward so that we can move them on that same continuum?
Thanks. Another example, Jana, I'm wondering, how does that accord with the examples you all have seen at MGI for successful superstar cities and the confluence of that with people and the companies? Are there examples that you point to where you're like, wow, the more we could do this, the better countries in the world would be?
Yeah, I think instead of picking up on cities, I'll pick on a theme that has been, I think, very timely during COVID, and that is homelessness. We all know that the high cost of living in many areas has been a real challenge. And I think COVID really was a wake-up call that this is an issue that has to be addressed. And across the globe, many cities found ways to do this. And just to pick on California, where I'm living, it was a big initiative we called the Project Room Key, of finding places for homeless people to live. And I think it has followed up on a number of initiatives that we are seeing happening, whether it's the Housing Innovation Challenge in LA, of finding ways to provide innovative solutions to housing at reasonable cost, the pallet shelters in Santa Cruz. And I think there's a number of nonprofits that are trying to find not just the construction technology of doing low-cost housing, but also smaller housing, getting around some of the regulatory restrictions for being able to find homes for people. And I'm truly hoping this is something that will come out stronger at the end of the pandemic that we certainly went in.
That's great. Michael, from your work and your perspective, what do you see for successes or cities and communities that have struggled, and what lessons from those?
So I don't want to play the pessimist here, but I do want to issue some warnings that I think we really need to be conscious of. I think the spatial concentration tendencies around big, successful metropolitan areas are very deeply built into the economic process and are likely to be baked into it for a long time if the ongoing sort of technological revolution that we lived through is any indicator. By that I mean that, from the 1980s onward, we saw that the digital revolution concentrated, it made the economy more skill intensive, but it concentrated the skills and the best companies in bigger and successful urban areas. Now, I think in the fourth and fifth industrial revolutions, from what I can guess, when thinking about this, are those revolutions going to be another episode of sort of spreading the wealth and opportunity to more middle-sized cities or smaller cities, or they can continue what we've been living through for the last several decades. Nobody knows the answer to that because we're in the nascent phases of those industrial revolutions that are upcoming, and we don't yet know what the winner technologies, the winner companies, and the winner sort of clusters are. Okay, I'm going to make a guess though that I think that metropolitan bigness is here now. Jana mentioned there are counter forces like very high housing costs, and the pandemic are causing people to rethink how concentrated we are and whether it's worth it. And they're driving some of the talent away from these places, possibly a little bit way, down the urban system. But so that, as an economic geographer, I'm thinking about those kind of two forces, the concentration one and the spread one. And I think on balance, I'm worried that there's still too much concentration of sort of the talent and the talent, the money, and the knowledge that seems to be baked into the system at this point. And so why I'm worried about it is that, right now, even in the developed countries, only about 35 to 40% of the population has a college degree. That might and probably will rise in the 21st century, and it will rise in the developing countries as well as they get more educated. But in a world where not everybody is a high-skilled, high-wage, knowledge-based worker, we're going to have regions that are not as wealthy as other regions, and possibly continuing to lose some of their talent and resources to these regions that are sort of the concentration forces. So I remain worried about those kind of differences, those kind of divergences, and what are we gonna do to spread the prosperity, or at least spread well-being a little bit more evenly across the map? And I think that's probably true of both the developed and the developing worlds.
Yeah, that's a legitimate worry based on recent years. We all know this. Jana, I see you've got a hand on this. Thoughts and rejoinders to Michael's important concern he raises?
Yeah, I fully agree on that. I do think one nuance on what is going to drive that balance, on how much we are going to see where we are going to see that balance between superstar cities and the regions left behind. The balance is shifting from companies making decisions on where the locations are to people, and particularly talent, making those decisions. And I am seeing shifts both as the higher share of older citizens who potentially want to work part-time and have a different quality of life. But also I'm seeing that amongst my younger colleagues, and I think we are seeing that as a pattern across some of the younger cohorts, of they are looking for a more livable environment. Many fathers had time to spend with their kids in a way they had not been when they were traveling for work. They are looking for ways they can do that in the future. So I do think that this a little bit of a shift of balance into particularly the talent workers that are scarce might alleviate some of your worries, and we'll see more evenly spread economic activity. But I do agree, Michael, fully that is a major concern and will continue to be.
Yeah, and it seems a big question is if talent workers are more evenly distributed through space, a lot of the externalities and spillovers that they generate might be more evenly distributed. So I think that's kind of one of these $64,000 questions that we don't quite know, is the persistence of work from home, or Stephanie, I'll put it to you in a global context, work from anywhere. In principle, suddenly this increased tradability of services might be a real boon to the economic development opportunities of a lot of countries around the world. I'm wondering from your important perspective with the World Bank Group, do you see certain trends with the digital technology pandemic interaction already playing out?
So, Matthew, I actually think that digital in many countries of ours has been the silver lining, and it has allowed people to continue to function. 60% of the GDP in Africa is generated from SMEs. So how do we actually create a digital economy where those SMEs can sell and trade and transact all of what we do in the United States or in Europe or in other developed countries? I think we're getting there. We're trying to solve different development challenges, but if we can't figure that out, the amount of migration from the younger populations is going to be real. And then I think technology works against us, because while I do agree that Europe and the US are aging, I think that many of the jobs that we could have otherwise done will be taken over by robotics, and the wealthy in those countries will be able to invest their money in the stock market and live, and the people who come from other countries won't be able to find jobs because they won't be skilled. So one of the things, well, a couple of things that we're focusing on, but one is, when we think about the digital economy, how do we think about building all the right layers? Because we don't have all the layers built everywhere in the world. So, there are 13 countries in Africa that don't have any internet access, basically, right? More than 70% of the people in Africa don't have adequate internet access. So how do we build the digital infrastructure to create the economies of the future for the poorest countries? And then how do we actually inculcate the necessary skills? So, as a result of the pandemic, 1.6 billion children were out of school. 450 million of those children did not have access to the internet. And we know from experience that the majority of those kids will never go back to school. And, more than 50% of them are girls. So they're not going to learn how to read and write, to say nothing of having the skill sets that are going to be required for, a digital future and a digital economy. So how do we pull those children back into school? How do we get them educated? How do we get them access to the internet? Another really big piece of what we focus on.
Yeah, access to skills and human capital development is a global issue, not just within advanced nations. So I appreciate you pointing that out. Michael, you've got some thoughts on what Jana and Stephanie shared here?
Yeah, in listening to Stephanie about the developing world, I was thinking about how a lot of countries in the developing world have gotten ahead in recent years, which is most of them, entered the world market, and they entered it largely through goods production, through being, especially in Asia, right, in East Asia. And what we see with the new technologies that you mentioned, Stephanie, is the possibility that a lot of the labor will be taken out of manufacturing, and some of it, I think, might even be reshored back to the developed countries, because the major comparative advantage of the developing countries is precisely its labor abundance. So that leads us back to what's the next stage for the developing world in terms of getting ahead, and what kind of sort of employment, but also labor pattern that might be going on there. I'm just wondering if you have insights into that.
Well, COVID didn't help. The supply disruptions that have resulted from COVID, I think, are going to drive more and more nearshoring and onshoring. And, we were seeing it already, but if you look at the shifts from out of China into Vietnam and, out of China into even the Northern Triangle, you're starting to see people really rethinking their supply chains, because it's just been so disruptive to that. But we do need to think about what are those skill sets for the future. And, for China, I think it's services and domestic. I mean, it's a huge domestic market. So to the extent that they can produce for themselves, they'll be better off. And I think you're beginning to see that domestic consumption happen in countries like China. In some of the less developed Asian countries, I think we're going to struggle to figure that out.
Yeah, the question often then is, tradable or non-traded services, can you get sustained growth in productivity and opportunities so that average standards of living continue to rise? And I know, Jana, you guys again at MGI have done such important path-breaking work on that. Any thoughts on these issues of where kind of those jobs will come from within and across nations as you look around the globe with the work you've done, Jana?
I must say, though, that is the one question that I have a very hard time being very optimistic about. I think it is not a new pattern. We have seen manufacturing share of employment decline over time. There is no industry where we haven't seen automation happen. And it is not going to be just that manufacturing plants are going to move from one location to the other. They will be increasingly automated away. And I don't see an end to that. And I think for economists more broadly and our capacity to forecast the future, the fact that we are seeing the rise of the platform economies, where you have really large economies of scale and almost zero marginal cost, it just changes the way the global economy works. So I wish I had an answer on this. And I think the only silver lining here is that if we really can translate this productivity growth into purchasing power of those consumers and those households who spent that money and don't save, that really can make a difference. If we have the demand, there's going to be somebody who's going to find something to sell to those folks. The challenge we are seeing right now is that we're seeing not just the middle wage or middle income jobs decline as a share, but we are also seeing a rise in income inequality, which means that a much higher share of money is going into pockets where people are saving. It's no coincidence that we have very low interest rates, real interest rates. So for me, it really is the challenge for us is that despite the technology that actually can create enormous productivity and growth in overall, we just need to make sure that we then put those gains to work into a virtuous cycle of growth in the economy that is sustainable and that is inclusive. So that really is what the solution is. How we are going to get there, I hope someone can help me with that one.
Well, we'll get there. We've got about 10 minutes left in our conversation, which has been rich already. And I think it connects back with the insights all three of you shared, which is that inequality of distribution of economic activity, be it employment or income or wealth generation, its interaction with spatial locations of individuals and companies becomes so powerful. And like you said, Michael, can persist across decades in a way that's difficult to kind of shift. A couple of you mentioned climate. I'm wondering, I'm going to ask two broad questions for a few minutes on each in the time we have left. I think given the range of topics that this overall AGS event is covering, I'm wondering if any of you wants to share any thoughts about climate change and what's coming with that, opportunities or challenges around where economic activity happens across space, interacting with people and companies' location related to the climate. Broad issue, I know, but if there are any thoughts you want to share as an input for this overall conference, happy to hear.
So Matthew, I'm actually less optimistic on climate than I think some others are. You know, when I look around the globe, if you want to talk about inequality, and the impact of climate change from an inequality perspective is massive. So the amount of adaptation that's going to be necessary, because climate is hitting the poorest the hardest. If you think about the floods, the famines, the fires, and what we've seen in terms of their impact in emerging markets, it's huge. And yet, if you just take Africa, outside of South Africa, 4% of the GHG emissions in the world. And yet the world is saying, again, to emerging markets where the bulk of the growth in GHG emissions are going to come in the next decade, you have to do it green. But by the way, we don't have any funding to help you do that, right? We don't have any funding to drive down technology cost curves. We don't have the ability to buy coal out, but you guys have to build green, even though we have polluted. So I think we have a huge issue of inequality around climate that we need to figure out how we address, and it's going to require the developed world to help the developing world so that we all do the right thing for the planet. And I'm not sure that we have yet thought about the new kinds of partnerships and collaboration that is going to require. I think we should all be watching COP26 really closely to listen to those messages and see whether or not collectively we can come together. That's one. Two, I don't think that even companies have fully thought through the risk of climate change and what adaptation is going to require. And, you know, where are we building factories that are going to be underwater? Where are we looking for farming where, you know, 10 years from now there will be insufficient water? Some of those kinds of things are very much geospatially driven and things that data could be telling us a lot about. I don't think we're doing enough of that.
Stephanie, thank you. I'll call it Piglet to Eeyore, but I hear you. We're hopeful to see what happens in Scotland in the weeks ahead. Michael, Yana, some quick thoughts on climate, its intersection with geography. Michael?
Yeah, so I would link that also, of course, to how geography and political or policy polarization are working today. So I can put on my French hat and say that, you know, we had sort of a political revolt called the Yellow Vests a couple of years in France, and that was essentially a climate change thing. What happened, I don't know if people, the American audience knows, is that, you know, the people, you know, basically the people in Paris said, we're going to be like, you know, really do an active climate change policy and raise the price of gasoline a lot. But of course, who drives in France or any other country are rural people. And it turns out that these rural people have much lower incomes than urban people. And so they said, look, you know, it's not that we're against doing something about climate change, but you're not going to make us all pay for it. And that led to a policy spiral of basically pulling back from doing the things we need to do. So I think the message here is that not only are the impacts of climate change unequally distributed across people, groups of people and places, but also the potential costs of that some policies impose are likely to have distributional impacts on groups and places that could block the policy process. And that's sort of a subnational version of the global problem. And we've got to think about mitigation, not just as the areas, but how do we to put it bluntly, buy the people in from different places into these cooperative efforts to solve the problem.
Yeah, thank you, Stephanie. Across nations, the buy-in, and Michael, on your insights within nations, whether it's France,
Exactly.
the Gilets Jaunes, the United States, on the inability to get a carbon tax. I agree. Jana, brief thoughts on this?
Just as I will bring my optimistic view to this on. I think climate actually, if we find some way to make some of the restrictions binding in some way or the other, it can be a real boom for innovation, technological change, and actually economic growth. And I draw that experience to the 1970s when we had a very unexpected energy shock with oil price rises. And it was actually, again, I'm picking on California. I normally do have examples broader from the globe, but in California, it was the California Public Utility Commission that basically set dramatically higher standards for a lot of consumer electronics as well as for cars. And because California was such a large market, most companies prefer to scale up the California standards globally. And California itself actually maintained the same energy per capita consumption over the next 20 years, while the rest of the US increased by 50%, and our economic growth didn't suffer. In fact, because people spent their money on things that created more jobs than spending it on energy, we actually had more employment as a result, according to the economists' estimates. So I'm thinking there is a way to actually make this a virtuous cycle. So I am here more optimistic than you are, Stephanie. I know the challenge is in the emerging world, but we need to put the burden someplace else and find a way to solution that actually benefits not just our environment and our people and our health, but also the economy.
I love that optimism. And on that note, we've got time for one closing question, and I'm going to call it the Oval Office or UN General Assembly, kind of at most 1 minute. And I'll start with you, Stephanie, and then Michael and Jana. I want to think about, you've mentioned public policy, kind of our institutions, be they national, international governmental organizations, civil society. I'm wondering if, in your closing minute, what remarks you would give, say, to the President Biden or the UN on institutions. How are they today, or what could we do in the future to have more robust institutions to address all these topics we've talked about? Stephanie, I'll start with you.
That's a really tough question, Matthew, and certainly people have been opining on what the multilateral development system should look like and how we should be different. I'm not actually sure that we need to pivot the multilateral development systems as much as we need to figure out how we collaborate differently. So what I see is different pools of money coming on stream to help us with some of these problems. They're not connected together, and everybody's still kind of working from their traditional vantage. And if we can shift that paradigm and create some different kinds of partnerships, so they might be public-private, they might be philanthropic and public, they might be philanthropic and private, but you kind of pull all those things together. You think about somebody like Bill Gates, who's created this new Catalyst Fund, and he's got his early energy fund. How do we use those kinds of initiatives? So that's the kind of forward-thinking technology with some philanthropy potentially, and my balance sheet and the World Bank balance sheet, and maybe something from the U.S. government. How do we piece those together in really different ways to help solve some of these problems? To me, is the first thing. And then there's no more fiscal space left in the world. Especially outside of Europe and the U.S. So it's really about policy that is private sector led, growth driven. That's where we're going to get the jobs and the economic growth to actually give people better lives. And it is where we all need to focus.
Got it. Thank you. Pools of capital, innovative private-public partnerships. Michael, your 1 minute.
I would say, Madam or Mr. President, in the future, you need to find a way to make sure that all cities, regions, and places feel that they have a buy-in to some kind of collective way forward. Because as a geographer, what I see is that these kind of fundamental forces have tended to make us seem as if we are living in separate worlds with different interests. And every country that I know of is facing this issue. And so I would say, whatever you do, think always geographically about how you're going to get everyone in. And that'll sort of help us to go forward instead of splitting apart.
Michael just gave us a campaign platform for the U.S. presidency in 2024-8. Jana, please close us out.
Well, I would go to the mayors. We will need everyone to pull in the same direction if we are going to solve some of the challenges ahead, whether it's on the climate, whether it's on inequality, whether it's some of the technology. And where I have seen this work very well is at the city level. So Mrs. or Mr. or Miss Mayor, find a way to bring everyone on the table. It needs to be not just the political governance bodies, but it is the businesses critically, it is the social organizations, it is the citizenry. And as long as you agree what you are going to do with your city or your region, you will get it done. I mean, it is amazing to see the magical things that many cities are doing, and you can do that too, as long as everyone pulls in the same direction.
That was awesome. All three of that closing remarks. We've covered a lot of serious issues of economics and public policy within and across sovereign nations, but I love the note of optimism, whether cross borders, within countries, or at the local level. So thank you. I've been really looking forward to this conversation. And Jana, Michael, and Stephanie, you've been very generous with your time and your wisdom and insights. And again, I hope everybody who joined us for this panel, that your overall attendance at this conference is something that's really informative and inspiring, because that's what we need a little bit more of in the world. So Jana, Michael, Stephanie, a huge thanks to all three of you for joining us.
Thanks, Matthew. It was great.
Thank you.
Thank you all for a very stimulating conversation.